This is a special podcast presentation from 700WLW.com. This is Casey Boland on demand.
And Casey Boland is on the way. In fact, standing by. Casey. The market recently, Casey, seemed rather queasy. And the question is, are we entering a bear market? Can you have a bear market when you're not in a recession? Because right now, that's where we'd be.
You're right. You can have a bear market without a recession, and you go back to 1976, and there have been 10 bear markets during that time period, 6 of which that were associated with a recession. You had 4, though, that were associated not with a recession, so you can have that. And so depending on the market you look at, some foreign markets are in bear market territory, while domestic markets are not there yet at this point.
So we point to what? I mean, right now the uncertainty continues. Janet Yellen the other day made the point that maybe they will not raise interest rates now. Does the market like that? Because that's kind of like an if, and they don't like uncertainty.
Yeah, the market doesn't like uncertainty, and according to one chief investment officer, the reason why we had some of this bear markets that were not associated with recessions was policy mistakes, raising rates like back in 1976. So some point to Janet Yellen now that they've been acting too soon, as well as looking at Japan for cutting to negative rates. Another element people point to is the financial crisis we saw back in '98 with the Asian currency crisis. Some people point, hey, we're dealing with that now with emerging markets and excessive speculation. That's happened in 1987. Some people say we're dealing with that now. You look at what happened with Facebook, Amazon, Netflix, Google, high-yield credit, venture capital. So some people look and say, boy, we have all 3 of those facets happening right now.
When you have a bear market and a recession, the drop is significantly more so than a bear market without a recession.
It is. The average bear market, when it's with a recession, is close to 40%. In non-recession bear markets, the average drop is negative 23%. So, if we're going to actually have a bear market, we might be headed for some more downside. But, when you look at leading economic indicators today to get a perspective of where the economy is heading, right now, most global trends indicate we are not headed for recession, but they're stable, but they're a bit fragile right now. They're still susceptible to downside risk.
Fair enough. Casey Boland of Hanghold Capital Management, he would be, and we got about 5 away from 9 o'clock.